Alright everyone, and welcome back to the channel for another update on Bitcoin. So, not too much is going on in the markets today. I did make a quick couple of updates over on Twitter where we talked about the Nasdaq, we talked about Apple earnings, the PCE results and a few other things. Nonetheless, what I want to talk about today is a little bit off the scope of the technical analysis in the very short term. The video that I want to make today is going to be focusing on my bull market checklist. Now, what do I mean by a bull market checklist? Well, this checklist is simply going to be 3 categories of things that I need to see line up. Number 1 being your oscillators, number 2 being your moving averages, and number 3 being your on-chain metrics. If these 3 things on my bull market checklist all collectively align, then I will be calling for this to be a bull market. But as you can imagine, my friends, until these 3 things are ticked off my bull market checklist, then my bull market hat remains in the closet. So with that being said, let's jump right into today's video and let's start off with what I need to see play out in the oscillators. Then we'll talk about moving averages. Then we'll finish off on the on-chain metrics. Let's dive in. So starting off with the oscillators, I'll mention the one that should tick bullish first, and this will be the weekly time frame for the squeeze mom, also known as the squeeze momentum indicator. Now, if you're a veteran of the channel, you would have long known the squeeze momentum indicator, so I'm not going to dive into it too much. But when you are trickling down into this light red phase, this is indicative that bears are in control. When you're in a light green phase, this is indicative that bulls are in control. And when you start to see these switches, whether it's from light green to dark green or whether it's from light red to dark red, it means that whoever's currently in control of the trend is starting to lose control. At this moment in time, just like after the previous dead cat bounce up to $32,000, the squeeze momentum indicator was absolutely unfazed, and throughout this entire capitulation, despite bounces from 25,000 up to 32,000, despite bounces from 17,700 up to 24,500, the squeeze momentum indicator is yet to say, hey, on the weekly time frame, bulls are starting to take control. So this is going to be one of the first things that I'm going to be looking at. Now, one of the second things, which doesn't necessarily have to happen, for example, if the first oscillator, which is your squeeze momentum indicator, if this has a massive breakup, the on-chain metrics line up, and then you get your moving averages line up, I'll definitely take that into consideration, but I would like to see a breakout from the downtrend on the weekly RSI. Now, let me just show you how historically beautiful this has been, categorically calling the bottom for Bitcoin. Now, back in 2018, Bitcoin was in a bear market, right? You can see bear market in price action, bear market in the oscillator. What happened when Bitcoin broke out the oscillator? It broke out on the 28th of January 2019, when the Bitcoin price was sitting at 3,400. The bottom was only down here at 3,200, so you really didn't miss out too much if you simply waited for that breakout of the weekly RSI. What happened when you had a breakout from the weekly RSI? You went up 1,900%. So one thing I would like to add with the oscillators is I see a lot of people recently saying, on crypto Twitter, crypto YouTube, you're going to miss the bottom. You're never going to be able to buy Bitcoin this cheap. First of all, I've been buying Bitcoin since 2017, so my average buy-in price is below 10,000. I think it's around about $9,000. And with that being said, I really don't feel FOMO at 25,000 when I've been buying all the way back down here. So with that being said, at least, I would be looking for the oscillators to break out. On the weekly time frame, RSI hasn't even broken out yet. So to think that you're going to be missing the next bull run if you don't buy at this moment in time is absolutely stupid, because previous times from the bear market lows, or even if you look at from the RSI breakouts, Bitcoin still yields ungodly returns, and it really doesn't matter too much if you bought here, if you bought here, or if you bought here. If you bought when there was a confirmed breakout, whatever metrics you were using, there was a beautiful bull run to be had to the upside, and I still think that's the case for what we're witnessing now on the Bitcoin price action. So that is the oscillators done. Let's move on to the moving averages. So for the moving averages, starting off on the daily time frame, then we'll jump into the weekly. Both of these absolutely need to happen before I can become mid to long term bullish on Bitcoin. And when I say long term bullish, I really mean for the next bull run. I'm always a perma bull on Bitcoin. I think it's going to millions and millions of dollars, but nonetheless, I still think there's a potential that we can move to one last lower price target before we have that massive bull run. So with that being said, on the daily time frame, very simply, clean chart, pull up the daily EMA ribbons. I want to see a successful, keyword, successful flip of the daily EMA ribbons. We have not had a successful flip since the all-time high up here at 69,000. Now you might be thinking, you know, we had a flip above it here, we had a flip above it here, and we had a flip above it here. What was not successful about these? Well, number one, apart from the fact that in hindsight, we can obviously look at these and say these were fake outs and they broke to the downside, a confirmed breakout does not happen until you break above the price action, the EMA ribbons flip bullish, you come back down, back test them, and then this is the very, very important part, because even if you get a bounce, it does not matter. You need to make a higher high from that point, meaning, you know, this was where you got invalidated. You need to break higher than that. If that never happens, you never have a successful flip. And you can see we came up above it, we found our invalidation zone. This was the area to break above. We came down, back tested it, came back up, didn't hit it, made an M pattern and broke down. That is what you call a failed move. Failed move equals a fast move in the opposite direction. Quickly but very, very surely, we move to the downside on the daily time frame. And you can see quite recently we poked our head above these for one day, got immediately clarted back down to the downside. And I definitely do think that in the immediate short term we might be looking like we do want to flip these on the daily time frame, but nonetheless we have really not back tested them. We don't necessarily have too much volume confirming this breakout, and you might be looking at this and thinking, well, there's tons of volume coming in here, but you know, look at this. I mean, we had more volume back here and this was a failed move. So I would definitely say we need a lot more volume coming in to confirm this as a breakout on the daily time frame. I'd love to see something like this where you've got a move up to maybe 25,000 and then you've got a very, very clear and concise back test while the EMA ribbons are flipping bullish at this moment in time, where you come back down after a bullish flip on the daily EMAs and then you have a push back up. Let's say we come up here, get invalidated, then as soon as you flip that zone, that would be another thing ticked off in terms of what I need to see in terms of the moving averages on my bull market checklist. Now, moving on to the second one, and this one definitely way more important. This is one of the most major and most talked about moving averages in a bear market. This is obviously your 200-week moving average. I think all of you know what this is now. On the daily time frame, we have not flipped this, and what I would like to add is I would like to see a successful flip of this with a confirmed volume breakout, with a confirmed back test, and a weekly candle body close above the 200-week moving average. So until all of those things happen, I will just be sitting on the sidelines. Once again, you know, we did see moves above here. You know, you came back down for the back test, failed it. Over here, came back down for the back test. You lollygagged on it for a few days, but then you lost it. So, you know, us coming back down to it now does not mean that we've confirmed the breakout at this moment in time. We still need to come back down and back test it and then break above the invalidation zone. And then that will be what I need to see personally in terms of the moving averages checklist over on my bull market checklist. So now we've talked about the moving averages, we've also talked about the oscillators. Let's head into some of my favorite on-chain metrics and then we'll wrap up the video. Alright, so for the on-chain metrics, let's start off with the MVRV Z-score. We actually covered this yesterday on my channel. We titled the video Hash Ribbons, but in this video we did also talk about the MVRV Z-score, so I'm really not going to explain it too much. It's more or less just an indicator, or an on-chain metric should I say, which tries to indicate and identify periods in which the BTC USD price is either overbought and in this red region, or oversold and in/below this green region. Now, what I said is, what I'm going to say now is what I'll reiterate from yesterday's video. The second that you see the MVRV Z-score enter this green zone, it means you're basically at a confirmed bear market and the bottom is either in or it's about to be in. And you can see back here, 2011, as soon as the bottom was in, MVRV score left this range. I believe it's between the ranges of 0.1 down to minus 0.4. Yeah, it is. I don't want to zoom in because it will mess up the chart. But nonetheless, what I do want to highlight from the MVRV Z-score is every single time historically that the BTC, or rather should I say the Z-score for the MVRV Z-score for Bitcoin enters this oversold region, as soon as it exits the oversold region to the upside, the bear market low is already in. We talked about this yesterday. I said I'd be keeping you up to date on this, and I'll be letting you know as soon as this flips bullish. Well, my friends, it has flipped bullish today. Look at this. You know, we finally pumped above, and once again, now I've zoomed into the Z-score, you can see 0.1 all the way down to minus 0.4. I've looked at this a few times, so I do remember this, but nonetheless, this was on the 28th, so yesterday. It takes in data points at midnight, basically, so the next time we'll get an update on this is in the next 2 hours or so, although this is UTC time, so it might take a little bit longer, but nonetheless, the bottom is in according to the MVRV Z-score, which once again is simply a standard deviation test done from the market value minus the realized value, and with this we get the MVRV Z-score. This indicator is at this moment in time saying, hey, Z-score is at 0.14. This is above the oversold region. We've exited this region, and now you'll see why I didn't want to zoom in, because the bottom of the chart is all messed up now. But nonetheless, we dived into everything we need to know from here on the MVRV Z-score. Apparently, the bottom is already in. So that is one on-chain metric out of two that I will be keeping my eyes on in order for, once again, everything to be ticked off of the bull market checklist. So you can write these down if you want. Tick off the MVRV Z-score, because this is already calling for the bottom to be in. And you can also see this what's it called? This orange line on the chart is actually the realized cap, also known as the realized price. This is basically, I don't want to dive into this too much, the average price at which every Bitcoin was previously purchased at. And typically as well, when you move beneath this on-chain metric and then you move back above it, the bear market low is in, just like how the bottom is in for the MVRV Z-score when you dip below that region of being oversold. And then as soon as you poke your head back above it, the bottom is in. And this has stayed true. You can look at this. This is very, very similar to the Z-score, because as soon as you enter this capitulation stage, as soon as you get back above it, it calls that the bear market low is in. So not only is the MVRV Z-score saying the bottom is in, but also the realized cap, also known as the realized price, is saying the bottom is in. But do bear in mind, the MVRV Z-score is simply an amalgamation of looking at the market value, it's looking at the realized value, and then it's taking a standard deviation test, plotting it over the chart, and then it's just saying, hey, also, here's the realized cap. So with that being said, let's move on to the hash ribbons. This is going to be the second oscillator that I would like to tick off of the bull market checklist before I become bullish. So let's dive into this. This is the last one. What the hash ribbon indicator shows us is moments of capitulation, typically when miners are turning off their mining rigs. Now, when this happens, you see a fall in the hash ribbons indicator, because bear in mind, the hash ribbons indicator is simply the 30-day moving average and the 60-day moving average for the Bitcoin hash rate. So you can see, you know, over on the hash rate here, we're looking at the hash rate on a 7-day moving average, and this helps to smooth things out, because when you look at the daily values for the hash rate, they can be a little bit euphoric. So smoothing this out, putting this on something like the 7-day moving average, but specifically for the hash ribbons, we're looking at the 30-day, which is the blue line, and the 60-day, which is the purple line. Once again, these are simply moving averages, not of the price, but taking in variables, or should I say, taking in data points from the hash ribbons raw values. Now, what this shows us, once again, is moments of capitulation in the miners, but what the blue line shows us, which is the 30-day moving average, is when this bottoms and when this starts to turn up and has a bullish cross above the 60-day moving average, it's historically always called the bottom. So you can see bearish hash ribbon flip over here, where the blue line, which is basically your short-term moving averages, capitulates beneath the long-term moving average, which is this purple line. This was indicative of a bearish flip, and you can see the Bitcoin price move from 6,000 all the way down to 3,200. Why did the price start bottoming around here? Well, you can see the blue line for the hash rate, which is simply the hash rate on the 30-day moving average, started to round to the upside. We had that bullish flip above the 60-day moving average, and subsequently, you know, almost every single time we do this, the bottom is in. Now, what I will say is this is a useless indicator in terms of black swan events, because you're looking at things like 30-day moving averages, 60-day moving averages. So in the March 2020 capitulation, when it happens like that, It doesn't really help you too much because once again, these are lagging indicators, they're moving averages, they're meant to smoothen out the data a little bit, and they're really great at identifying bear market lows. They're not good for identifying anything else. They're not good at identifying black swan event bottoms. They're not good at identifying bottoms when you are running up in terms of the market structure. Like over here, you can see this dip from 39,000 down to 30,000. You know, you wouldn't have got anything from that on the hash ribbons indicator, but what it did tell you is it told you the bottom was in very, very near to where the absolute bottom was on the Bitcoin price before it had a massive rebound to its actual all-time high. And what you can see is, zooming into the price action, we actually had a bearish flip of this quite recently when the price was around about 20,000, and the blue line for the hash rate's been moving down. The hash rate quite recently, though, in the past couple of days, bear in mind, it has had a decent size correction, a very decent size correction. But in the relative near term, it has been moving up very strongly, which is why we're starting to see a slight round up from the 30-day moving average, not so much focusing on the 60-day moving average, because once again, we're really interested in this blue line, the 30-day moving averages for the raw values over on the hash ribbons. Once we have the blue line cross bullish over the purple line, that will be the final thing I need to see to become bullish. So there we go, my friends. That is my bull market checklist. I need to see each one of these individual items in each category flip bullish, meaning I need to see the oscillators that I talked about flip bullish. I need to see the moving averages that we talked about flip bullish. And in terms of the on-chain metrics, the MVRV is already calling the bottom. Let's see what the hash ribbons do. I'll be keeping you up to date on all of these, of course. I'll be letting you know on YouTube if I do end up flipping bullish. But at this moment in time, once again, until the bull market checklist is all ticked off, then I will be in my bearish stance. I like to look at these markets as unemotionally as possible. I like to use on-chain metrics, previous moving averages, previous data, previous fractals, everything that I have at my disposal. I like to look at in a purely mathematical perspective. I like to leave my emotions at the door, and because of this, we've been sitting on the sidelines for months, and this is why I'm really not too worried about the Bitcoin price right now. I've been in this market for years. I've been DCAing below 25,000 as well. You know, once again, that has been something that's been well documented over on my YouTube and my Twitter. But at this moment in time, I'm not 100% sure that the bottom would be in, but I will be looking at these items that we did run through today. And when these all do flip bullish, you will be seeing a bullish cowboy back, my friends. That is all I've got for you today. Be sure to follow me over on Twitter. I did share a bunch of individual things over on here today. And we also talked about the recent Ethereum scandal. So once again, you want to hit me up over on Twitter, follow me. It is here at 618_cowboy. So all I've got for you today, my friends. And as always, cowboy out. Peace.